A fever broke overnight while the market spiked nearly 3%. The VIX flatlined at 17 as speculative leaders surged and fear products hemorrhaged liquidity. This is what recovery looks like when capital remembers where it belongs. The speculation has found its pulse again. ARKB climbed 3.27%, SPHB gained 3.54%, and MAGs added 1.49%. When speculative instruments lead the charge, the market is allocating resources toward higher risk tolerance rather than defensive positioning. The consensus among the Canary community is clear. Confidence has returned to asymmetric bets. Credit conditions are cooling off without breaking. The Russell 2000 gained 1.37%, and IWM added 1.22%. Smaller companies are participating in this rally, which signals healthy breadth rather than narrow concentration risk. Our metrics confirm that capital rotation is flowing from defensive sectors toward growth exposure, exactly what a recovering economy demands. Fear has flatlined while the market climbs. UVXY dropped 7.53%, VIXY shed 5.13%, and VXX lost 5.54%. The VIX itself crashed 17.37% in relative terms, indicating that hedging demand evaporated, as investors realized downside protection was unnecessary. When volatility products sell off this aggressively while the market rises, the Canary dashboard shows immunity building against panic triggers. Corporate earnings are the heartbeat driving today's move. 10 major companies reported results, and tech-dominated headlines. Microsoft posted record daily value gains, while Qualcomm's automotive segment shined despite data center headwinds. The data is screaming that operational momentum exists beneath the noise. When 10 consecutive earnings reports generate positive headlines without creating volatility spikes, fundamentals are working as intended. Safety has retreated from its defensive perch. GLD added 0.75% while bond gained barely 0.18%. More telling is XLP consumer staples losing 13%. Capital rotated out of safe harbors before the day closed. The consensus among the Canary community indicates this isn't flight to safety, it's rotation into conviction plays. When defensive sectors underperform while the market rallies, investors are allocating toward winners rather than hiding in shelters. The hero is capital, returning to its natural habitat, productive assets with upside potential. The villain was fear compression that forced premature defensive positioning, and today's action neutralizes it. Portfolio exposure to technology and semiconductors captures this momentum, while VIX weakness signals reduced hedging drag. Our metrics confirm the market has found equilibrium between risk and reward at levels not seen since 2021. The fever broke as capital rotated back into productive assets, with technology and semiconductors leading the recovery charge. Expect continued rotation from defensive sectors toward growth exposure as earnings momentum sustains through August. The Canary is singing again.